Starts live. We are going to talk about AMD chart analysis, AMD stock prediction, and where we think that we're going to find support on AMD, Intel, the SMH from this point, because it appears as though they're going to move lower in the short term anyway. Now, the question is, how historically valued is AMD at this point in time? Is there a lot of downside room in the stock, or has this disappointment been priced in? We're going to talk about that in a moment. We're also going to talk about the weekly charts. We're going to talk about LNG, liquefied natural gas, why we have a new trade on in LNG, and why we think it's moving up higher. So let's get to the news out of AMD, and we'll take a look at the chart, then the price to earnings multiple, and then we will talk about where we have historical support below. And before we do this, I must say that I am fairly unprepared tonight. I don't have a ton of topics to go over. So I'm going in for an operation tomorrow early. So there probably will not be a Sunday night futures live. So don't expect that. If I feel good, I'll do it. Members, I will definitely do the week ahead commentary, probably coming out on Sunday late. So just give me a little bit of room there. And then hopefully by next Thursday, we'll be back to normal with our normal schedule. So let's talk about AMD. What happened here? Well, a couple of things. Headline: AMD tumbles after catastrophic pre-announcement drags. I can't help but bring this up. All right, so over here, obviously, I go to this website a lot. And I have not typed on any of these. Actually, I typed on this, clicked on this. I did not, I did not click on this item here. I swear to God, I did not click on it, nor did I click on these two shoes. But the really most embarrassing thing is this here. I did not click on that. So don't hold that against me. Anyway, AMD preliminary Q3 results. This is good of them to do this. They didn't have to, which fell were a disaster. Some 20% below analysts of the company's own guidance from just 2 months ago. Don't put a lot of faith in analysts. They're usually wrong anyway. AMD reported that Q3 revenue was about $5.6 billion, which was 29% year over year. Think about that. That's beautiful revenue growth, but was far below the average estimate of $6.71 billion. I see value in there. I see value on any capitulatory sell-off on AMD. The company said preliminary results reflect lower client segment. Excuse me, folks. I got to mute this. It's my hospital calling. Sorry about that, folks. I just got my instructions from the hospital. I got to be there at 6 a.m. Ugh. All right. So let's go to comments. If anybody wants to make fun of me about these, I got to see what these are. Zuko's, oh, they're cycling pants. I thought they were butt implant pants. Okay. All right. Let's go to comments. Hey, Talon. Hey, brother. Yoga Mac. Oh, hello. Yo, Bob and Contrarians. Ready for the drop. Credit Suisse ready to pop. I think Credit Suisse is dead money. I think it's dead money. Denny, come, Bob, tell the truth. Those pop-ups always tell the story. Yeah, I'm surprised. Yeah, I looked at them. They showed them to me. Maybe they look better in green. I don't know, but I don't do cycling, and my wife always teases me. I have a flat ass, so I figured, the way online marketing is right now, they were spying in on one of our conversations. They were promoting this stuff, but apparently the cycling pants. Okay, learn a new thing every day. Now that's going to show every single time because I clicked on it. But what I don't do for this show, I give it all. I put it out there. All right, so back to hey, TZ Burton. Hey, brother. I work out of Speedos. And I have a soft cushion on my chair too. All right, so obviously revenues coming. Revenues are more important to me than earnings. So yeah, this is not good news, but 29% year over year is pretty goddamn impressive relative to the 6.71 billion. Results from reduced processor shipments due to weaker than expected PC market and significant inventory correction actions across the PC chain. Now, this is where I think that AMD is going to take the big hit. And what NIM is, net interest margin, is to the banks in terms of their report card each quarter, margins are everything to semiconductor companies. So, in the latest confirmation that the inventory and margin crushing bullwhip effect is now everywhere and about to unleash a deflationary tsunami, AMD said that non-GAAP gross margins will be approximately 50%, down sharply from the company's previous guidance of 54% announced just 2 months ago. So they're doing what the Atlanta Federal Reserve does. Every couple of months or a couple of weeks, in the case of the Atlanta Federal Reserve, they downgrade guidance, and that's not good. So they're going to, if it's not priced in already, they're going to price it in. So where at the close, how was AMD priced? And this pop-up is going to continue to pop up. But if you go back a few months ago, we had a 40 handle, high 30s on AMD. This goes back to May. And at current, we're trading at a 28 and a half handle. We're going to be trading below that tomorrow, which on a historical basis is not horrible for AMD. So I think what we need to do here is take a look and say, okay, do we have an opportunity? And what we're going to do in a moment after we take a look at the after hours action is we're going to take a look at the weekly and monthly charts to identify where do we have historical support below at which we would feel confident with getting long. So let's take a quick peek. AMD closed at 67.85. Last tick was 65.16 with a low of 62.721. So that is not quite a 10% decline, about an 8% decline after hours. Not horrible. Let's see what the rest of the market is doing here. We have the E-minis, S&P E-minis down 0.2%. They were lower. VIX rising. We're firmly above a 30 handle now on the VIX. We've been trading above that mark for the past hour or so. The dollar weakening up here a little bit. but consolidating, and the 10-year yield coming in slightly. Now, taking a look at the NASDAQ in the after hours session, NASDAQ down less than a third of a percentage point. We were lower, about a third of a percentage point. Taking a look at competition, names like Intel. Intel is not the bellwether it used to be. Intel closed at 27.18. Oof. This is down consistent with AMD. Last tick 26.44. So a significant hit to Intel. Let's see what's happening over at NVIDIA. NVIDIA closed at 136.56, really taking it on the chin. This is nearly a 10% haircut for NVIDIA. The semi holders closed at $200.56. Last tick 197.25. So it's not going to be a good morning for the semiconductor sector. We're going to go to the weekly charts in a moment. We'll talk about how we appeared ready to close out the week in a little while. So, see who else joined in here. Danny, thank you very much. Appreciate the prayers. Thank you. So, let's get to it. Where does AMD bottom out? It's what everybody wants to know. Where is it going from here? I think what we need to acknowledge is how we closed out the day. And I'm going to kind of work backwards here. Normally I go to the weekly charts or monthly charts first, and then I go to the daily charts and intraday charts. But I'm going to do the inverse here. You know, this is a total plug. A total plug. I freely admit it. TrendSpider 35% discount code below because it saves so much time. And the automated trend lines told you today, look out. There's probably a little bit of trouble coming your way. To put them back on, attempted breakout, reversal. But what we should point out, and to be fair, is that we remain in a wedge formation, an ever-tightening wedge formation. Now, the lows of this wedge formation is at 62.26. Where are we trading in the after-hours session? Wow, this is pretty goddamn accurate. The lows of the after-hours session was 62.21. You don't get much closer than that, and we bounced off of that support level. So I think what we need to do is appreciate that we bounced in the after-hours session anyway off of support. That being said, remember, institutions that may want to sell on this news, they can't sell in the after-hours. There's not enough liquidity. So they'll dump in the morning. If they want to, if it's not priced in. If we, by the end of business tomorrow, hold this lower band of support, or if by noon tomorrow we hold this lower band of support, AMD could quite very well be a buy. Remember, year over year, this is the reduced guidance. Year over year revenue growth of 29%. We went over the PE multiple. It's cheap on a historic basis. So maybe it's priced in. We don't know. Do not play the game of watching the shares get flushed out tomorrow, trying to chase it short because it may rip your face off. All right, so be careful. Now, what if we do break support tomorrow? Let's pull back to a monthly view. And not looking good. I mean, we broke down hard last month. We have an inside month thus far, but we're only 6 days in. Now, the lows of last month were 62.83. Now, what if that 62 mark, wow, What if that 62 mark doesn't hold and we break it? Well, the monthly chart's saying that at a bare minimum, we're going down to 51 bucks a share. You'll have a speed bump at 59.44, but ultimately we'll overshoot to the downside down to $51 per share. Weekly view. Now, what's important about this weekly chart is that we have support below on a weekly time frame of $60.85. Let's go back to the daily chart, and on the daily chart, overlay weekly support below. And you can see right here in dash line is weekly support, in solid line is daily support. So expected defense, like you saw in the after hours session, of that support level on AMD. Now, why did the market rally yesterday? Well, initial jobless claims, clearly one of the reasons. Bad news is good news, as sick and perverse as that is. You saw an uptick in initial jobless claims, not good for the employee, but certainly good for equities because the fear of an aggressive Fed gets subdued somewhat. But tomorrow, we're going to get what I like to call non-farm payrolls. Now, tomorrow's market is going to rely predominantly upon a couple of things. One, has the market priced in disappointment of the semiconductor sector? Because remember, it's not just AMD. If margins are being squeezed at AMD, in all probability, they're being squeezed across the board because of demand, not for the quality of chip, but because demand overall. So what could ignite this market up higher tomorrow? Well, let's use AMD as our canary in the coal mine. If AMD holds that 60 level by noon tomorrow and reverses off of it, and we have non-farm payrolls which come out worse than what was expected, and earnings which are below average, that is going to ignite a rally in the market. Why? It's simple. Bad news is good news. I can't make it any more clearer. This is not a capitalistic society anymore. It's not about saving, hoarding. It's not about companies innovating anymore. It's all about what the Fed is going to do. We are a creditor nation, and everybody's looking for the Fed to tell them, what do we do here? Do we buy, sell? What are you telling us to do? So they'll interpret a weak number tomorrow on non-farm payrolls, average hourly earning, as being an opportunity for the Federal Reserve to take their foot off the pedal. Not so unusual is that you have Neil Kashkari, the most dovish of the Fed members, coming out late morning tomorrow, and he'll be speaking. So I don't believe that to be a coincidence. And he also spoke today. Now, one thing the Fed might not the Fed, one thing that the markets may have a problem overcoming is this. The Federal Reserve's balance sheet continued to decline. This is now the third consecutive week. We haven't had that in the past few years. Third consecutive week of the Fed's balance sheet drawing down. They are unwinding their balance sheet, folks. So what does that mean for equities? Well, I do this over and over again. If cheap money brought us from down here, I should say, here, from 2008, when they started ramping up QE, if this caused this, then how does this not beget more selling? I don't know. I'm not that smart. But this is a problem. Have no doubt about it. This is a problem. Now, I went into the week. I got to bring this up because some joker who's probably out there too left me a note. He quotes me here, and I'm going to play the clip. Bro, I'm not trying to hate, but you really got to change your name. I bought the dip Friday because I'm a true contrarian. The market was down 17%, blah, 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 blah. Now, he uses my quote here against me. Now, remember, this is on Sunday Night Futures Live. And I said, we're going to need to feel more pain. We're probably going to put in new lower lows. And here's what I had to say. First, I got to get through bear market rally, but we need more pain first. Why? We broke the June. Sorry. Lows. It doesn't end there. When you break a prior low, which was put in months ago, it just doesn't stop with 1 week down. It's going to take more, and you're going to need to see a support level tested, probably overshot to the downside, a rally back, and a bullish key reversal bar on the week. We close at the lows of the week. What that means is that in all probability, statistically, we are going to take out the lows of last week, and in the futures market, we already did it. So we took out the lows of the prior week in the futures market, yet it leaves me a moronic comment like that. And the week isn't even over. Like I always like to say, never go by what Monday, Tuesday, Wednesday, Thursday look like. You have one trading day left to go. A lot can happen. Don't get so cocky and arrogant that you think you're right when you could quite very well be very, very wrong. So to this guy, I give zero respect for being, frankly, ignorant and arrogant, which is what I typed back to him. To gasoline prices moving up higher. This is not going to, it's going to bode well for the election, but it's not going to bode well for the Federal Reserve and what they need to do to tame inflation. So what we did this past week is that we opened up a position on natural gas. And I kind of got out of sequence here. I'll come back to this. Now, here's a president that has completely lost control of the narrative. I believe that these guys want him out. The Saudis have rejected him. The Venezuelans have rejected him. The Saudis went as far as to cut 2 million barrels, or OPEC, I should say, 2 million barrels of production today. And that's per day. And what did oil do? It skyrocketed today. Home heating oil skyrocketed today. Gasoline prices skyrocketed today. So they want him out. They're going to do everything they can to get him out. And it's probably going to work. Now, we bought today, actually yesterday, Cheniere Energy, symbol LNG. Now, I'll talk to you about why we bought it on a technical basis, but why I wanted to buy it on a fundamental basis is that we screwed Germany. I believe personally, I have zero evidence that we blew up that Nord Stream 1, Nord Stream 2 pipeline, but it makes sense. I've said that I have little doubt that the Europeans would try to cut a backdoor deal with, in particular the Germans, with the Russians to try to get gas flowing. Somebody had to have interest in blowing up those pipelines. Guess who? Who won? Follow the money. We did. Our LNG exports are going to boom. So why the White House is not going to ban LNG? Follow the money. That's where the money is. And when you take a look at a chart of LNG on the week, look at this bull flag setup. We broke out on the week. One trading day left to go. A lot can happen. So for all I know, we could reverse and close low, but right now we're up on this trade. And Stokes hooking up higher, RSI flirting with a breakout. But again, one trading day left to go. And the only caveat I'll make here that does concern me, and I did try to book some profits. We entered using common stock and a call option trade, and I wanted to get rid of the call option trade because we're profitable. We're up like 9% on it, 10%. Is because we've had 7 consecutive up days. The probability of us getting another one is kind of improbable, not impossible, but statistically, you're going to have a hard time. And plus, we flashed Doji Star Formation. Now, for those not familiar with the Doji Star Formation, it's one of my top 5 favorite candlestick patterns. Link below to my 5-part video tutorial on what a Doji Star Formation is. It's a sign of indecision. You'll get these when you have a tug of war between bulls and bears. Why might you have that with such positive news for LNG? Simple. We're near all-time highs. You'll have bulls that are hesitating, and you have bears that are leaning into the short side. So it makes sense that you're seeing a little bit of indecision up here. I think this gets resolved to the upside. Seymour. My mouse is not working. She's over 18, so we could goof on her. If Greta blew it up, that would be the USA. Yes. Larry, OPEC plus cutting supply this week is not political. It's a move to counter the slowdown in demand. Oil prices are going lower after this rush. It's 2008 all over again. Okay, interesting thought. Talent. Oh, that's Larry again. Oh, my friend, not me, was in the hospital getting fixed. They undressed him and put him on. I'm not getting put on those stirrups. I hope. All right. So natural gas looking really good here. Up on this trade. Now, this is not what I wanted. Okay, so I started reading this, and I had to take a look who the writer was, who pushed it out, because it drives me utterly nuts when you see the mainstream media use this type of verbiage. Now, there's a contradiction here. So, the U.S. has so far avoided recession, despite the fact we've already put in 2 back-to-back quarters of GDP, negative GDP. These guys are taking the narrative from the administration and saying we're not in a recession because we haven't met some ridiculous metric they've decided that now makes a recession that's never been used before. But here in the alternative media, we do not redefine words. We keep things constant, consistent. That way we're honest and truthful. None of this nonsense. None of this anti-truth nonsense out of George Orwell and his 1984 book. So when I read this, I said, you know what? Not typical of Zero Hedge to publish something like this. Usually they're more truthful. So I had to go up and take a look at who wrote this. Simon White, of course, out of Bloomberg. And I put this in yellow, reporter and strategist. No, that is propaganda and chief. So propagandist in chief. So he writes, so far we have avoided recession, carrying water for the administration. And he puts this chart up here. U.S. stock market is priced for a recession. No, we're in recession. We're in recession. That's why it's priced for a recession. You moron, you communist, you. So we are in recession, and it's not impossible for the Federal Reserve to balance out their guidance moving forward, because the dollar, I'm going to do a video on this, the dollar milkshake theory. We talked about it earlier today. The dollar is crushing global economies. The Bank of England has caved. Credit Suisse has caved. The yen has hit all-time record lows, I believe, versus the U.S. dollar. You have central banks that are caving in. The EU getting ready to capitulate. So the Federal Reserve, while it needs to fight inflation, they can't have a global collapse as well. They're backed against the wall. So I'm not going to step back from what I believe is going to be the outcome here. The Federal Reserve's stated goal was 2 years ago was that they wanted inflation at 2% average. Then they revised it up before inflation really hit to a 2% average, a 2% average. What that average is, or what over what time period, I'm not sure. If they use a 15-year time period, well, I guess we're still at an average 2% because we had no inflation, right? So what if they move it up to a 3% or a 4% average target? Well, then we're there. We're there over a 10, 15-year period easily. So that would allow for the stock market to rally. That'll allow them to possibly, if they have demand destruction significant enough, to be able to come out and say, we've met our objective. That'll bring the dollar down. It'll allow for the pressure to come off the central banks around the globe. Everyone's happy with of course, the U.S. consumer, because in reality, inflation is still going to be moving up higher. It's a tax. It's the hidden tax that the federal government applies on us. And of course, now you have Janet Yellen out there stating that what she wants to do is get more taxes on, guess who? You and me. So we have average hourly earnings declining in real terms meaning in terms of inflation. You have the inflation tax. Now you're going to have the administration come in. They got to be after the midterms, come out with a new tax hike on the middle class. Can't make it up. Oh, don't forget, you have 87,000 new IRS agents coming after not the 1%, you and me. Buckle up. It's going to be a wild ride, folks. All right. So last article before we go to the weekly charts, and then we're going to do some chart requests. So if you have any requests, hold them until I ask for the symbols, and that way I don't miss them. But we will take them when we're ready. So that way I don't miss you. I'm looking at comments here. Thought you were talking about AMD. Sean, we already did. If you want to go back, if you watch this on YouTube, which it appears you are, you can scroll back and you can go through that was the opening topic here. We went over the after hours price action, valuation, the whys behind the sell-off after hours, and where we believe there's going to be historical support for AMD. So check it out, or check it out later on. Stick with us. Great to have you. We're going to be doing some chart requests in a moment. And folks, if you haven't done so, please smash the like button, subscribe to the channel. Sean, great to have you here. Troutfly, the /CL whale trade of 1933 contracts with 1928. What's CL? Oh, it's light sweet crude. Gotcha. All right, so 928, 79. Okay, interesting. Yeah, I mean, you take another, besides oil, you take a look at every distillate out there. You take a look at home heating oil. Look at this move. Look at this move. This is bananas. Thank God I filled up. What else do we have? Gasoline prices. This is a weekly chart now, and we broke out. Actually, no, this is a 4-hour chart. My apologies. We broke out on the 4th. We're going up higher. Gasoline's going up a lot higher. And this is the spot price. Yes, thank you, Talon. I only memorize a few of them, like /NG for nat gas. Okay, so thrust signal triggered, powerful move off low, says bear market rally has legs. This is very true. You don't get rallies like this in a bull market. A bull market is you open lower, you close higher, drip after drip after drip, and it drives people crazy because they never got over the bear market and they're climbing the wall of worry. So look at these moves here. This was a move of 6% with only 4 trading days. 4 trading days. Actually, no, 3 trading days because we gapped up here. So that doesn't happen in a bull market. So while I'm not convinced yet that tomorrow is going to necessarily be a down market. All depends upon perception, right? Do we have non-farm payrolls come out weak? If no, that's a green light for equities to move up higher. Excuse me, equities to move up. Excuse me. If the non-farm payrolls come out weak tomorrow, that is bullish for stocks. If average hourly earnings come in weak, it's bullish for stock, as sick and perverse as it is, because traders will not fear the Federal Reserve. Now, the key is that AMD, the semiconductor sector, does that take the market down? Well, we've already done the analysis. We know that we're near support levels on AMD. I'm going to presume the same on other semis as well, because they generally trade in tandem. So we should see some defense of support levels tomorrow. We should know by noon, tomorrow afternoon, whether or not we're going to get a counter trend rally. Tomorrow is going to be a very significant morning. So if we do rally and we close the week out above 38.07, get ready for a continuation move rally next week. Let's go to the weekly charts and see how we're poised to close out the week. Now, these first couple of charts I'm going to go over are not bullish at all. What we're going to begin with here is the 10-year yield. Now, this is a weekly chart. We were down earlier in the week. That's when equities were moving up like this. Now we've flashed a bullish key reversal bar. Now, as contrarians, and unlike my previous commenter, we don't count our chickens until they're hatched, right? So we don't know whether or not this market or these yields are going to close at the highs of the week, or will we sell off and close at the lows of the week? We're contrarians. We're very, very skeptical. But as it stands right now, as technicians, the probabilities of us closing strong on the week are very, very high on the 10-year yield. Tech stocks in particular will not like that. On a closing time frame, daily view, we have a lot to prove here. We have to, when you're at the top of a trading range, there's a saying, the test is always at the top, right? Do we break out or do we break down? As traders, we just sit there, wait. We'll take our cues. If we break down below 35.64, 3.564 on the 10-year yield, you better bet your bottom dollar stocks are going up higher in a very big way. I would be a buyer of technology stocks tomorrow morning, in particular AMD, NVIDIA, SMH, if you want to be diversified, if you see a breakdown on the 10-year yield. Until that happens, I'm sitting on my hands. Actually, I'll be in surgery, so I guess I won't be doing anything tomorrow. Early anyway, but I will be back at my computer at some point in time tomorrow. TLT, 20-year bond ETF. not bullish. It looks as though we may break to new lower lows next week. But the bullish part here, even though we're down on the week, because remember, bonds and yields trade inversely. So if bonds are weak, it means yields are probably going the opposite direction. So on the week, we haven't put in new weekly lower lows. That's bullish. That's good. Now, how do we close out the day? We're still in a trading range, and I would argue. Now, keep in mind, as I say this, I think that ultimately we're going to get resolved to the downside. We're going lower. That doesn't mean we can't have a counter trend rally. Remember, we're heading into a seasonally favorable period of time. November historically is more seasonally favorable than what is December. And we could go over that in a moment. So let's take our crayon out here and say, okay, here's our higher low. Maybe. When do we really want to get bullish on equities? Well, as luck would have it, we are entering the apex of a triangle formation. If we break out and above this declining downtrend channel, that means that yields are going this way and equities are going this way. The dollar. Now, as a gold bull, as a silver bull, I'll be honest with you, this chart is disturbing. But there's a little bit of a strange anomaly that's happening with gold and in particular silver relative to the dollar. And that's that they've been trading in tandem. So what that leads you to believe is that the either central banks or the retail buyer are out there. They're not trusting the dollar. They're certainly not trusting fiat in general. And they're looking to buy gold. They're buying silver in particular. Silver has really ripped. Gold has played a little bit of catch up, but silver, wow, what a move up higher. Now, the dollar last week flashed a bearish key reversal bar, portending that we would go lower. And we did go lower. The problem is that we have now reversed and we are now up on the week. That's kind of bullish. Volume, very high. A lot of that was selling. I am not of the belief yet that the dollar is done correcting. I could be wrong. Daily view. And here's what I see setting up. I think that this rally here on the dollar is going to fade for a couple of reasons. One, we have our momentum indicators. They are clearly very, very negative, putting in a lower low, trading down below 50. Both lines, actually, the slow line is now declining, fast line now hooking up, but down below 50. Rallies generally tend to fade when you have this situation. Volume on the dollar today was very, very light. So great price action these past couple of days, but yesterday was not very bullish. You know, we filled a gap. Today, they gapped it up higher, closed at the highs of the session, but was stopped at resistance. So I'm not putting a lot of stock into this dollar rally. And we're going to talk more about the correlation between gold and silver in a moment. Now, the euro is the proximate demon because it's now reversed on the week. It was higher, now lower. But all these indicators are implying that the euro is going to reverse and move up higher. What's the catalyst? Could it be non-farm payrolls tomorrow? Could be. If it's disastrous, yeah. You'll see money flow into euros. Why not? The yen is just a basket case. It looks as though we're going to break and break lower on the yen. So that's not going to help. The VIX, volatility index, we're back above 30 on the volatility index. Had we closed out the week below 28 on the VIX, I would be a lot more bullish on equities short term. And we have one trading day left to go. Maybe it's going to break down, close down below 28. Daily view. Daily view. So here's the bad news. We broke out today on the VIX. We didn't break out above one resistance level. We broke out above two. We broke out above the lower band of declining resistance and above, again, 30, actually a little bit higher than 30. So that's not good. And a lot of people are out there saying, oh, the VIX is high, you got to buy. When the VIX is low, you got to go. Folks, when you have a bear market sell-off like this is not capitulation. This is not capitulation. We've gone over this before. I'll show you capitulation. This is capitulation. Dot-com bubble, 45 on VIX. Financial crisis, 89 on VIX. COVID sell-off, 85 on VIX. That's capitulation. We are nowhere near capitulation on the VIX. Dow Transports, they were above resistance. This is why I always say don't go buying an index based upon a weekly chart early in the week. Wait until later in the week. The probabilities of success are going to be higher. So the transports looking good, but no breakout yet. Dow Jones Industrial Average currently trading or closed above the 200-period moving average on a weekly time frame. Stokes are very oversold. Daily view. A down day, but not a broken day. There's no reason why we can't come down tomorrow, fill this gap, and then reverse. I mean, yesterday was a heck of a reversal day. Yeah, we closed down, but I believe that the reason why we closed down yesterday on equities was simply because you had day traders flattening out at the end of the day. I mean, we turned green after being down 2% on the NASDAQ. S&P 500 weekly chart. We tapped resistance and we faded a bit. Daily view. That 20-period moving average acting as a bit of resistance. No shock here. That happens. Consolidating. Tomorrow by noon, you will know whether or not this market is rolling over or whether or not it's about to recover. The way I would play it is this way. If they gap the market down lower tomorrow and they rally it back, they fill the gap, whatever, they rally it back, and then it rolls back over again and takes out the morning lows, if you're dying to short, that's your time to short. However, if they gap it down and rally it, then I would not go shorting the market. I wouldn't buy it yet, but I would wait until the final half hour of trade, and then I would look to go shopping to ensure that we don't get a fade by the end of the day like we did yesterday. We got a fade at the end of the day. Trip Qs, of which we were short. We did a quick scalp the other day on the Qs. Short. Currently at resistance above another support level. We may be putting in higher lows here on RSI. I want to be bullish. I want to be. Because it kind of makes sense. You have to think that these central banks are coordinating. If Credit Suisse would have rolled over, been nationalized, you would have seen the Dow Jones down 1,000 points overnight. The fact that the Bank of England intervened and that goosed the U.S. market speaks volumes. So they know they're breaking the global bank. So they're going to have to compromise to a certain extent. It only makes sense because if you have a blow up of a major money center bank or, God forbid, a central bank, then everything goes to hell in a handbasket because there is a quadrillion dollars worth. That's 1,000 trillion. A quadrillion. I think it's 1,000 trillion or 1,000 billion, one of the two, dollars worth of derivatives out there. If one of these companies goes bust Everybody's going to be asking the same question that they had back in 2007 and 2008. Who has counterparty risk? And the Federal Reserve could not hold that crash together. Heck, the Federal Reserve couldn't keep the COVID crash together. It took Congress to come in with spending packages. No central bank is going to be able to save us from a derivatives blow up. Simple as that. And they know it. And plus, you have seasonality. Favorable. Daily chart, not much going on here. All right, let's take a quick look at gold. Strong week. Think about it. The dollar is now up on the week, yet gold is up nearly 3% on the week. That's huge. That's a major tell. And if you want to see if I have this here, TNX US dollar. Yeah. So here's the correlation between gold and the US dollar. It's an inverse correlation. So it's down 25% of the time. Let's change the time frame here to a daily time frame. So that correlation was on the monthly. Take a look at this chart. Look at this. We're putting in higher lows and higher highs now on correlation between the US dollar on a daily time frame. Think about it. This is a sea change. And add to that, you had an inverse, we still have an inverse correlation on both the dollar and the 10-year yield, which is in silver. The US dollar is in green, correlated to gold. The thing that's changed here is that the severity, the rate of change of that US dollar gold trade, the 10-year yield gold trade, it's becoming less worse, meaning strength in the dollar is beginning to mean less of an impact on gold. So this is a very bullish event for gold bugs to see this type of behavior. Let's take a quick look on a weekly chart. Yeah, look at this. Hooking up on a weekly time frame. Like back here, they traded together. Back here. Good. All right, folks, I'm going to do some chart requests. I'm going to sign off. I got to get ready for tomorrow morning. First, we're going to go over seasonality. If you have quotes you want me to go over, please just drop them into the chat box, and we'll go over them. First, I want to begin with seasonality on AMD really quick. Why won't this minimize? There we go. Okay, so this is going back 13 years on AMD. October is an okay month. November is a very, very good month. Generally up over 13 years, 67% of the time. Not bad. So we're heading into a seasonally favorable period of time. I think that this AMD news is something that the markets have been predicting. They're probably going to price it in. We know that we've gone over the PE ratios. We're probably going to see some buying below here. That's my take on it. Could be wrong. If non-farm payrolls come out too strong tomorrow, that'll be a problem for the markets. However, if we get a miss on non-farm payrolls, a miss on average hourly earnings, and we see a sell-off on AMD, I bet you they buy AMD. Offer support. Taking a look at the S&P 500 seasonality, it's probably the same as AMD. Better than AMD. October, we're up 69% of the time. And AMD is only up 67% of the time. In November, the S&P 500 is up 82% of the time. It drops down to 75% of the time in December. So this is the reason why I am still not giving up on a possibility of a continuation move up higher on equities despite the news out of AMD. That's my take. Let's do some chart requests. Thank you, Seymour. Appreciate it, man. All right, I had one from I don't think Franklin's on tonight. Maybe put it in the members area. He wanted me to go over a ticker. He didn't put it on here. All right, so let's go over Boeing. And I'll go over a couple of more if you want. If not, I'm going to call it a night and get ready because I have a lot to do. Boeing. I'm liking Boeing here on the month so far. Monthly chart. If we don't sell off hard tomorrow, we could see a continuation move up on Boeing up to 140 per share. Weekly view. Actually, this is a weekly view. I'm sorry. And we have one trading day left to go. So if we close strong on the week, we close at or near the highs of the week, expect to move up to 140 next week. Daily view. We have immediate resistance above. So just be forewarned, resistance in blue, as noted by the automated trend lines. So wait for either a pullback and a retrace back down to actually we have a VWAP here, down to 127. I would be a buyer at that level on any sell-off tomorrow. Watch for a reversal, but I'd be a buyer, very, very small. Wait for a breakout above the upper band in blue at around 133.50 per share. Ideally, a close above that mark. We don't care where it trades intraday. What matters is where it closes. And with that, folks, I'm going to call it a night. And again, for those just joining in, we're not going to have a Sunday Night Futures live tomorrow night. I got to go for a procedure tomorrow. So I will definitely get back to Thursday Night Futures live. Actually, Thursday Night Stock Charts live. Larry, good luck tomorrow. Thank you, Larry. We always thought Gluteus Medius was one of those great stuff. It's actually a good name, too. Yeah. Franklin's here. All right, GLNG. I knew you was. See, I didn't forget you, Franklin. Thank you, John. Very much appreciated. Appreciate it. Thank you. You're a gentleman. TZ Burton, you're welcome. All right, GLNG. Bolar. All right, so a couple of things about Golar is that we had broken out back here in August and had given up support. So while we've bounced back, we do have resistance immediately above here. Oh, I screwed up. Wrong. We really need to see a close on the week, Franklin, above 25.59, because if we fail to hold it, it just means that it's another subsequent fade, like we saw the week of the 19th and the week of the 26th. Ideally, we close above that mark, and then we make a run up to around 27.60 per share. And I would be more of an aggressive buyer on a breakout above that resistance level. In fact, let's do this. See where we peaked out on the week? It's right at the upper band of this downtrend channel. So what we have here formed is a triangle formation or wedge formation, whatever you want to call it. Call it cupcakes. It doesn't matter. I would do this. If you're looking to add more to the trade, buy more on a breakout above the upper band in blue. I'll keep a little bit of sensitivity on there so you can see it. I'll share this out with you. But I would really wait until we get a close above that upper band of resistance. Let me see if I can get a number for you. My mouse is being so wonky right now. Come on, paste, man. That's in there for you. And that price target at current is at around 26.77, but it's declining, so I continue to check in on it. I would just connect the dots. It's pretty simple. You know how to do it. Daily view. Now, on a daily view, yeah, we had broken out here on the 4th above daily resistance, retest 1, retest 2. It's looking for a follow-through day, and I think we may get it. I think that this is the optimal time in our history to be long of LNG, to be honest with you. And that's why we put on a trade in it this week. So I think ultimately it's going to get resolved to the upside. Hey, folks, thank you for being here. Hit the like and subscribe button. Don't forget TrendSpider, 35% discount code. We give it away free to our silver and gold level members. So join up, 14-day free trial offer. Everybody have a profitable trading day tomorrow and have an awesome weekend. I'll talk to you soon. Be well.